Why would there be a shortage of everything? Okay, all of a sudden out of nowhere, and it's because prices have been suppressed for a very long period of time. Now, we talk about it all the time in silver because it's an obvious example, and it's a metal that people invest in directly. But it's true in all the metals.
Welcome back to Liberty and Finance. We're delighted to have this renowned and legendary returning guest. Ted Butler, the founder of Butler Research, is one of the earliest analysts practicing in the precious metals space in the modern era, and he has been a voice for caution and a voice for insight into what's going on the major metal exchanges, the dynamics, the macro factors affecting demand and supply and pricing and future availability of precious metals and how they are used in both industry and for investment purposes. He was formational in my introduction into this arena, and we're just delighted to be able to have him back here on Liberty and Finance to delve into some questions about where we are right now, where history has brought us to, and where we're going next. Ted, thank you for joining us on Liberty and Finance.
Thank you for that incredible build-up. I hope I can come close to justifying some of it.
Well, I'm not alone in being able to say that you were one of the first analysts ever that I was able to learn about even the importance of or existence of, for example, silver and the metals markets. And that's been true for many people, not just myself. And they are eager to hear what your thoughts are on this current situation. We've gone from just a couple of remarkable years here with whatever you want to call it. We've ended up with global lockdowns, huge disruptions in the supply chain, volatile prices in both equity markets and metals. And people have called this whole last decade the bubble of everything, where we have stocks and bonds and real estate for the first time in recent history in simultaneously in the same direction, correlated positively to each other, with nothing being able to serve as a hedge to protect people going forward, leaving in some cases, some studies, the Ibbotson study for one, saying that metals are the only remaining asset class that's anti-correlated to these others that are all in a bubble, and it's the anti-bubble. And that leads us to a discussion that you and I were just discussing, and that is these unusual times. We're leading from the bubble of everything into the shortage of everything. And you've done some deep thinking about that and some research, and could you bring us up to date on what your big picture thinking is about this time that we find ourselves in?
Sure, I'll try. Basically, it seems that for the first time in my lifetime, which is getting on in years now, that we have basic shortages of everything. And a lot of it can be blamed on the pandemic and the lockdown and the resurgence of economic activity, et cetera. But I'd like to speak about just the key industrial commodities, the metals and the energies, oil, gas, et cetera. And it seems that we all of a sudden have shortages of just about every metal that comes to mind, a new one being added, every day. And I believe that there's a commonality here. There's aside from the pandemic and the unusual decade that we've gone through financially, with financial assets of all type hitting all-time highs. We have a situation now where we have shortages of basic things, aluminum, copper, tin, nickel, not yet visible in silver, but it's almost impossible that all these metals across the board would have be in what we'd consider shortage situations, and not to affect silver. But let me speak in general first. It seems to me that in thinking about it, that the reason we have these shortages now is because we haven't abided by the law of supply and demand. The law of supply and demand, which is the cornerstone of any free market economy, basically holds that if there is a developing shortage of a particular commodity, the sure and only cure for that developing shortage is to have higher prices of a fulcrum between supply and demand. And as shortages develop, you have to have prices going up to encourage new production and discourage demand at the margin. And we're not having that, okay? We are having higher prices, but the prices are being fought, okay, the higher prices, and they shouldn't be. And who they're being fought by are the exchanges, the recognized exchanges of the world, such as the LME, the London Metals Exchange, the COMEX and NYMEX in New York that are owned by the CME Group. It's dawned on me that because the exchanges themselves, the London Exchange, the New York exchanges, are basically exist for the benefit and profit of the key insiders of these exchanges, okay, that the exchanges are not operating with the idea, with the goal of free functioning of the law of supply and demand. It seems that they've taken actions over the years, recently and over the years, and the actions they take are always designed to benefit those who are short, which are generally the exchange insiders in most cases. Current examples in copper, the LME is putting in exchange exceptions and emergency measures to allow the shorts not to have to live up to their contractual obligations of delivering material, and basically trying to let them off the hook. And this is a standard procedure. It's happened here in New York. It's happened in London. It's happened everywhere. When the exchanges, when difficult times come, the exchanges always side with the shorts. The public and the producers can be damned. They don't care about the average. They don't care about the supply, the law of supply and demand. They're only interested, the exchanges are only interested in protecting their members. And the problem with everything, with this, is that we get our prices from these exchanges, and we assume that the prices are based on a free functioning of the law of supply and demand when nothing could be further from the truth. Everything about price is basically from the exchanges for the benefit of their important members, and their important members are generally on the short side. So if you're looking for an explanation for why we have such shortages, okay, and they're not going away anytime soon, yet prices such as the price of silver hasn't responded sufficiently, okay, to the developing shortages, it's because the exchanges are standing in the way. The COMEX, in the case of silver specifically, is suppressing, enacting rules and trading regulations that favor the insiders who are basically short. They're keeping the price down for the benefit of their members. But the problem is this. The problem is, in the end, the law of supply and demand will win out. And regardless of the exchange's interference and disruption and distortion of the law of supply and demand, that it's going to win in the end. Now, the end, when is that going to be? Everybody can guess, but boy, the signs are strong now. We have so many shortages and so many things, and it doesn't appear to be getting any better. And the only thing, perversely, that will make the shortages go away is sufficiently higher prices, okay, to encourage more production and discourage consumption. yet the exchanges are standing in the way. And they're doing it in full view of everyone, and we just don't recognize it. We just don't recognize how corrupt and dishonest these exchanges are, the LME, the COMEX, the NYMEX, all of them. And that's the key problem right now. We're at that critical point where I think it's about to break to the upside because it's gotten ridiculous, where these exchanges are taking measures to keep prices low in the face of shortage, which is exactly the wrong thing to do.
It's interesting. You mentioned the people don't realize how corrupt and how much breaking the law, I guess working outside, in this case, a natural law that you're talking about. It's a natural law of balancing supply and demand. Yeah, on our channel, we've had experts on over the past month or two in particular talking about violations of the law and failures of trustworthiness, basically deception and betrayal is what Jim Rawls from survivalblog.com calls it. He says we are living in the age of deception and betrayal, and that's in government and in the election process and in media and in the medical complex and in education and in the financial world and on down. It seems that what you're describing is not just happening on these metals exchanges. It's happening in many, many avenues of life. What are the consequences? How long do you see that kind of suspension of natural law can be maintained? What are the consequences if business as usual continues, specifically in the arena of the metals? How will that affect producers, consumers, investors, industrial, etc., if this persists further?
Well, it's going to persist until it ends and ends suddenly. And the only measure of that, and we're seeing it now, is in these developing shortages. If you don't have enough stuff to go around, and we don't at this particular time, based on everything that we see every day. The only cure for that is higher prices. So what we have as a situation now is that the exchanges are basically, and the shorts who they represent, are basically fighting what is a losing war, in that they're continuing to try and do everything they can to prevent prices from going high enough to where there will be a real world response. If prices were high enough right now, we wouldn't have any shortages. We would be, we'd have all the stuff we need if the price was right. But because the exchanges have endeavored to encourage policies that favor their insiders, who are generally on the short side, okay, and taken rules that have kept prices artificially low, we're going to be faced with these shortages until prices go high enough. And I think we're at, I believe, closer to the breaking point than ever before because of the visibility of the shortages. It's like that's the telltale sign. It's not what anybody can project, okay, and specifically predict in terms of time, but we're seeing it around us. There's shortages of everything, and that's not normal. It's not natural. It would never occur, barring some, a catastrophic worldwide, failure, crop failure, what have you, which we really haven't had. It's like we're seeing the signs of it in the shortages, and the shortages can't persist because sooner or later it just blows up in your face, and despite the frantic and highly successful efforts of the exchange to keep these prices low, it's going to blow. It's like that's where the law of supply and demand comes in. When there's not enough supply, people will pay any amount to get it, and we're getting to that point. And I never thought it would would reach this extreme. But there has to be an explanation for why there's such a dramatic shortage of in energies and in industrial metals. Okay, that unifies and explains the whole thing. And if it isn't, the violation, the active suppression of price that distorts the law of supply and demand, I don't know what is. I mean, I'd love to hear, what's number two? If this isn't the explanation for why we have such pervasive shortages across the board, then there has to be some. These are big markets. These are consequential things that demand explanations. And if someone can come up with a better explanation for why we have shortages other than these exchanges, the CME, the COMEX, the NYMEX, the London Metal Exchange, actively suppressing and succeeding in keeping prices low and distorting the law of supply and demand to where we don't have enough production and we have too much demand, then let's hear it. I for one would love to hear it.
Something you just touched on there really was a light bulb moment for me. We've talked, I think, or at least I've limited my understanding of this for years that we've talked, you and I, about the activities on these exchanges having an impact on price. But I haven't thought that through, as you just laid out for us, that is actually an impact on availability. We've talked, on the side with other mining companies and like Rick Rule as an analyst about mining and so on, about a decade or more of less shortages that are coming from lack of exploration, lack of investment in development, lack of developing the long lead time production of some of these industrial metals that are going to be so necessary for proper functioning of our society. And yet so if I'm hearing you correctly, you're saying that this activity of price suppression not only affects investors and the ability of those to benefit from that, but the actual producers and the fact that we have these shortages is exacerbated, in some cases caused, certainly worsened by unnaturally low prices.
Absolutely. I mean, and that's it. I mean, there's no other export. Why would there be a shortage of everything? Okay, all of a sudden out of nowhere, and it's because prices have been suppressed for a very long period of time. Now, we talk about it all the time in silver because it's an obvious example, and it's a metal that people invest in directly. But it's true in all the metals. There's not a metal out there that isn't in shortage or whether a certain level of shortage. It's never happened in the history of the world. And again, searching for the reason. Why is that? How could the price be suppressed for as long as it's been, okay, to where we've gotten to the point that there are shortages? And when you look for that explanation, you have to look to the leading commodity exchanges, the COMEX, the NYMEX, the LME, okay? That's where the manipulation, the price suppression is taking place. And when you understand how these exchanges operate, they do not operate in the public interest. They may be publicly owned and traded, as in the case of the CME group, but it's a mistake to think, okay, that the rules and regulations and general daily operations, okay, of these exchanges has any concern or interest, okay, for either the public in mind, which they don't, or even the producers, the mining companies. The mining companies don't even hedge on the COMEX because who wants to hedge at such low silver prices? Okay, so it's like it's the public be damned, the producers be damned, and the only ones who are not being damned, okay, are those insiders of the exchange. And in COMEX silver, it's more than blatant, it's more than obvious that the big shorts are the leading members of the exchange, and these exchanges are private. Okay, even though they're publicly owned, they're privately run with the benefit of the insiders who are on the short side, and everybody else can go take a hike. And the problem with it, it's been going on for so long, decades, that now we're in a real bind. We don't have the price incentive for miners to go out and start silver production. It's just not happening. It's why production has been falling off on an annual basis for the last five years or so. It's that the price has been messed with. The price mechanism has been messed with by the crooked operations of the exchange. The COMEX is a crooked operation. It's under the protection of the federal regulators who look the other way, and they go back and forth in the revolving door between industry and regulation. And it's like the public is left out of this whole thing. Everybody knows that the price of silver is manipulated and suppressed, but yet it goes on because the mechanism of the suppression, price suppression, the actions, what takes place on the COMEX, okay, is what determines the price. And these guys aren't going to give up until you take them out on stretchers. It's like it has to be. And what's going to take them out is the shortage becomes so pronounced that even the emergency measures that like the LME just put in for copper last week, whatever, it works in the short term. But look, the problem is the price isn't high enough to encourage new production. And until it is, that we're going to have shortages. They're not going away. And look, I mean, you want to look at what the problem is. The problem is the price is too low. The reason the price is too low is because of the crooked operations of the COMEX in the case of silver, LME for other metals, copper, tin, nickel, whatever, go down the line.
You've got me thinking again here, because we've spoken with Wayne Jett, the author of The Fruits of Graft, Great Depressions Then and Now. He talks about all the parallels between the Great Depression of the 1929 through the 1930s versus what we're being led into, and how in his research, his extensively footnoted research in that book, he shows that FDR and these industry cabals that were set up in the government to work with the government. You mentioned about the collusion between industry and government during the Great Depression to regulate prices and that sort of thing, did effectively collapse the prices of many commodities. And you had farmers having to sacrifice their herds, dump their crops, destroy because they couldn't even afford to keep bringing them, raising them up to maturity or bringing them to market because the prices had just collapsed underneath them. And then that led to widespread food shortages and hunger and starvation, and frankly, the deaths of many people, as well as the loss of family farms, etc. So the impacts are very real and drastic on ordinary people, on their lives, their livelihood, and their family businesses, etc. And people are now looking at potentially facing food shortages ahead because of this shortage of everything. We've been encouraging people to garden. We've had other guests saying people really need to secure their food supply and get their food security figured out now. So the impact has certainly happened in the past of official concentrated interests manipulating markets in order to benefit themselves, and the public taking the hit for that, and businesses taking the hit for that. Any further thoughts? Have we seen this before? Has this ever happened in these commodity exchanges before, from your standpoint? And how has it gotten resolved, if it has gotten resolved in the past?
Well, I mean, it's a good point. I'm listening to your recitation of history and stuff, and neither of us were there at the time, so I can't, we don't have I don't have firsthand experience on it, but I can tell you that this is a highly unique period of time. I don't imagine that this could have occurred in past time. I'm talking about the metals, and I'm talking about the energies, the crude oil and natural gas, et cetera. So what I'm seeing there is that it is a long-term thing. Prices have been suppressed in the case of silver on the COMEX for decades. Okay, at least the decades that I've observed it. I don't think that we didn't have. I don't think in the past that the influence and the power of the modern commodity exchanges. I don't think, as I recall, I don't have anything to compare them to. I can say what's so remarkable about this is that it has been going on for, we'll say at least the last decade, and most commodities are more longer than that in silver. But the thing that's so amazing about it is that it's occurring in full view. We're all part of it. We watch it every day. The statistics are published. Everything is right in front of us. Yet it's going on. Everybody assumes that the exchanges are legitimate and that they foster and encourage the free functioning of the law of supply and demand. But in actuality, it's the opposite. They've actively suppressed, the price because it's to the benefit of their insiders who make the rules and decide what the trading regulation should be. And we're going along with it as if it's this is the way it should be. That yes, with these exchanges are highly legitimate, but the proof of the pudding is if these exchanges were so in tune with the free functioning of the law of supply and demand, then why the heck do we have so many shortages? There shouldn't be anything but a very temporary shortage under the full free functioning of the law of supply and demand, because price would adjust itself to where you don't have to, advertise for people to open new silver mines or copper mines. You just put the price high enough, and it's the profit incentive that will drive them. That's been prevented. It's been prevented, by the workings of the exchange, which are basically dishonest and corrupt. I want to be as clear about that as I can. And the net result is you have to have shortages. So shortages are, the natural result of price suppression. We have shortages in everything. How could it be anything but organized long-term price suppression?
Now, you publish once or twice a week a update on what the available information does reveal to you as you examine it about the internal supply, demand, short position, long position, actions by concentrated position holders, etc., on the COMEX at least, and probably the other markets as well. The general question from our viewers on that is, how transparent is the information that we have available? We have in other arenas of life, as I mentioned, this doesn't seem to be unique in being confusing, seem to be violating the laws of nature, etc. There are other things in the world that seem to be doing that as well. For one, we have John Williams from shadowstats.com on quite periodically talking about the difference in truth and reality between the government statistics, the headline statistics that he as he calls them, that are out there for the consumer price index, the GDP, et cetera, versus the measurable and demonstrable actual numbers that are hugely different from the official numbers. So one question right off the bat to you is, as an analyst, how transparent are the activities of the COMEX versus how opaque, and how much reading between the lines do you have to do to try to figure out who the participants are and what their actual actions are?
Well, this is going to surprise you a bit, but I think the information that we get regarding, look, I'm a silver guy, that's my interest, and I'm sure that there are parallels or connections to other things from silver, what I see in silver to other things, but I don't choose to speak about them or dwell upon them. As far as your specific question about the transparency of what's taking place in silver on the COMEX, I don't have any problems with it. I think it's fine. I think the problem is that it's I guess a little bit hard for some people for a lot of people, for most people, to drill down to sufficiently, but that's not the problem. The problem is that when you look at it's transparent enough. The data is transparent enough in silver, okay, that they're not necessarily hiding anything, and it's the data itself that proves the manipulation. It's not like I need more information. The information that they're providing proves the manipulation. Specifically, we have the largest concentrated short position, okay, meaning the position is large, held by a few traders in silver, in COMEX silver, than in any commodity in the world. And that's been true, with very minor exceptions, for the last 4 decades. The amazing thing is this: the data is there, and it's it's free. You don't have to even pay for it. The government, the CFTC, provides it on a weekly basis in the Commitment of Traders report. But the remarkable thing is, it goes undetected, or because it seems to be a little bit confusing. But I'll point one thing out to you. In the case of the COMEX and silver, the commercial traders are generally the banks. Everybody thinks they're mining companies. They're not. They're the banks, okay, and financial institutions. And when these guys when they go short, they never buy back. They've never bought back a short position, okay, on higher prices and taken a loss, okay? They only buy on lower prices. They sell on higher prices. They buy on lower prices. Now, a lot of apologists for the banks and the exchange and the COMEX will say, well, that they're just performing their natural market making function. Well, that's nonsense. Okay, there's never been a case in the world where a seller has only been able to buy back, okay, on lower prices and sell more on higher prices. That's only on the COMEX that I can see, and the data basically confirm that. That's crooked in and of itself. You can't, these guys basically never go into the market and book losses. I've never seen the commercial traders on the COMEX buy on higher prices. They only sell on higher prices, and they buy on when prices are down. It's unnatural. It couldn't possibly occur in a non-manipulated market, and that's probably the biggest proof of how manipulated the silver prices have been. Is these guys, they never have to buy on the way up. They never cover shorts, okay, as prices are rising. They only cover shorts and buy long contracts when prices are falling due to all the dirty trading tricks that they control, okay, by being the key members of the exchange.
Yeah, and as analyst Rob Kirby talks to us about, the U.S. has never had a failed bond auction, even though we have net dumping of U.S. bonds by foreign holders, et cetera. Nobody wants to buy the bonds, and yet we've never had a failed bond auction. So we've got nature being suspended all around the financial edifice as well as other places in our lives. We're just concerned about making sure that as ordinary people, we're at least aware enough that we can be prepared to take steps to protect our families from the fallout of that. And a lot of families got hurt very badly during the Great Depression, as we mentioned earlier. We want to make sure that we try to get people be aware so that they can position themselves to be in the right places in this environment. Any words to the wise? We are not financial planners or advisors, but things that you tell good friends and family members about ways that they can help reduce their family's exposure to any of this wrongdoing that's going on?
Well, I've been kind of like, to this point, you'd have to classify me as, negative, that this is all this rotten stuff is going on, the distortion of the law of supply and demand, the corrupt nature of the exchanges. And it's like it can be considered to be a bummer, okay? But at the same time, there is a very positive side to this, and that needs to be, kept in full perspective, and that's namely this. You can only fool, Mother Nature to a certain extent. You can only distort the law of supply and demand to a certain extent. Now that we're seeing the tangible evidence of the long-term price suppression in so many industrial metals and energies on these exchanges, and shortages are cropping up, across the board. This is the time, okay, to focus and say, what's the next, natural step to this whole thing? And the next natural step and result of this whole thing is soaring prices. So if you're a potential or an investor in silver that is discouraged by the continued control on price and the suppression that takes place on the COMEX, well then take warning that this is not going to last that long. The final stage before a long-term price suppression is broken, okay, are visible shortages, which anybody who doesn't see the visible shortages are just not looking. That's the time when it's most likely that the thing is going to just end and prices burst upwards. It's just that I'm like shocked it's gotten to this extent in this. We're in, a supposedly, free market and free dissemination of news. All this stuff has been happening, okay, in full view, and yet so few have zeroed in and concluded, what's really going on. So this is the time. We're at the end of this thing. We're not at the start of it. The shortages mark the end result of a long-term manipulation, and to interpret it any other way would be, you'd be foolish not to see it. It's like we're on the verge of price explosion in silver that it's going to shock people. But when you look at what the background is and what's going to cause it, it's like it's as clear as day.
Well, Ted, we are very grateful for your presence here always with us on behalf of our viewers. And if people want to get plugged in and learn more of your frequent publications on the market, where should they go?
www.butlerresearch.com.
Excellent. And we always want to remind people, if you won't want to miss a single interview with Ted, because some people have been saying that we're being quote unquote shadow banned by YouTube, meaning they're not receiving notifications every time we put up a video. Just a reminder that we do put up videos every single night of the week from Monday through Sunday, and at 9 p.m. Eastern. And so if you don't want to miss a single one of those, you can get on our free email list. We'll send you an email with every single video. You'll see a description and a picture and a clickable link to get to it. You see the SoundCloud audio version as well as the video version. And we are not only here on YouTube, we're also on Rumble and Brighteon. So you can just go to libertyandfinance.com, libertyandfinance.com, put in your name, your email address, submit. You'll get on our mailing list once you confirm, when you get a confirmation email. As always, Ted, on behalf of all of our viewers, we're just so grateful for you being here with us, and thank you for joining us again on Liberty and Finance.
Thank you, Dunnigan.